this is a topic we don't normally want to talk about. Put the garbage can on the curb, watch the truck take it away, and it's out of our lives. Do you know Waste Management? Maybe you've seen their name on the side of some trash cans or dumpsters. They have that green and yellow logo. Well, they're the main company in the United States that deals with our trash. They take it from businesses, residential areas, have contracts with the cities, bring it to transfer stations and compact it, but it ultimately ends up in landfills, of which they own and operate more than anyone else in the United States. The industry has been consolidating, but they seem to be the ones coming out on top of it. They reported almost $18 billion in revenue in 2021, and I think we can believe that number, but in the past, well, this is a statement released by the SEC in 2002. The Securities and Exchange Commission filed suit today against the founder and 5 other former top officers of Waste Management Incorporated, charging them with perpetrating a massive financial fraud lasting more than 5 years. The complaint, filed with the U.S. District Court in Chicago, charges the defendants engaged in a systematic scheme to falsify and misrepresent Waste Management's financial results between 1992 and 1997. This is also from it. Our complaint describes one of the most egregious accounting frauds we have seen. For years, these defendants cooked the books, enriched themselves, preserved their jobs, and duped unsuspecting shareholders. Let's go back to the 1950s. This was a different time, even when it came to waste collection. I guess you can say it was a much smaller and simpler industry back then. There wasn't nearly as much waste being produced compared to today, and to reflect that, the regulations concerning where and how to dispose of it were much more relaxed. Since it wasn't a big deal, garbage was usually taken care of by the town or the city, or in some cases, there were small private companies that would do it. But in the 1950s is when the industry started expanding, because all of a sudden, there was way more garbage being produced. This was right after World War II. There was a baby boom happening, so the population was expanding at an incredible rate. And the economy was strong, so everyone was buying things, and the things people were buying were now packaged in these disposable containers. Combine all these factors, and you have yourself a lot of garbage. In 1956, there was a small garbage collection company called A Scavenger. The original founder had just died, and it was taken over by his son-in-law, Dean Buntrock. At the time, they were only operating 12 garbage trucks around the Chicago area, but Buntrock took notice of the new potential in the industry. To take advantage of it, he invested heavily in expanding this business. All the ways you would expect, buying new trucks and making deals for garbage collection in new areas, even acquiring some of their smaller competitors. In 1965, the government responded to this nationwide increase of trash production and the impact of it by passing the Solid Waste Disposal Act of 1965. Without getting into the specifics of it, it basically provided some stricter rules when it came to collecting and disposing of garbage. There were now higher standards that had to be met, which meant there were higher costs for everyone in the industry, and if you couldn't afford them, well, that was it. It was sink or swim time, and only the larger, more professional, put-together companies survived. Luckily, Ace Scavenger spent the last decade expanding, so they made it. A couple years later, they merged with another similar company, and the resulting company was called Waste Management. This was obviously a situation where only the strongest survived. Waste Management knew it, and they did everything they could to grow stronger. In 1971, they had an initial public offering that brought in money that they immediately used to start acquiring competing companies. They bought 90 smaller trash hauling companies in 1972. From there, they landed some contracts from other countries to start taking care of their garbage. They started getting involved in the disposal of chemical and toxic waste on which the government was making new regulations. In their first year of operation as Waste Management in 1968, their revenue was $5.5 million. Compare that to the early 80s when it was now hovering around $1 billion. In the 1980s, they were involved in a line of scandals that involved dumping hazardous waste in illegal places. Now, the accusations run much deeper, but they admitted to doing this in a site in Ohio and another one in Alabama, which resulted in millions of dollars in fines, a sharp decline in their stock price, and a lot of negative publicity. But that's not even the scandal I want to talk about. They actually made a pretty quick recovery from it. I just mention it right here so we can get an idea of who we're dealing with here. In the early 90s, after years of mostly non-stop growth and success, they finally started experiencing some major financial troubles. There's a few internal and industry-wide reasons we could blame for it, but I think the simplest and quickest way to explain it is it was a weaker economy. People weren't buying as much stuff, so they were producing less garbage, and businesses weren't aren't making as much stuff, and that also means less garbage. In 1993, the revenue fell for the first time ever, and profits were down. Do you know when you're a kid and you get a bad grade, so you're afraid to tell your parents about it? I mean, what can you do? You didn't do well, so you have to go home and face the music. Or, if you're a little unethical, you could skillfully pull out your red marker and change that grade. This is essentially what Waste Management did every year from 1992 to 1997. I don't know if you're familiar with the stock market, but if your earnings come in below expectations, it is not good for your stock price, and it's not good for the company in general. They definitely had pretty big motivation to lie about their earnings, but it's not as simple as changing that final number with a red marker. Here's some of the things they did to make it appear that they were doing better than they actually were. As the SEC put it, they avoided depreciation expense on their garbage trucks by assigning unsupported and inflated salvage values and extending their useful lives. This is a big one, so let me explain. When you buy an asset, such as a garbage truck, you capitalize it, meaning it's not an expense right away, it's expensed gradually as it depreciates. To figure out how much you depreciate it each year, you take the purchase price, which is what you paid for it, subtract the estimated salvage value, which is what you think you can get for it once you're done with it, and then if you're using the straight line method, you divide that number by the number of years you expect it to be useful. I know, that was a lot, but just a made-up example. Say they bought a garbage truck for $50,000, and they expect to use it for 5 years and estimate they can sell it for $10,000 once they're done with it. So the accountant over at Waste Management takes the cost, $50,000, subtracts the $10,000 salvage value, and divides that over the 5 years, resulting in an $8,000 depreciation expense each year. That's how it should be, but then we have this crooked management team over here saying, forget the $10,000 salvage value, just say we can get $20,000. I know we can't, but just say that we can. Reworking the calculation with the new number gives them a $6,000 depreciation expense each year, which is $2,000 lower than it was before and effectively adds money to their earnings that shouldn't be there. Same thing with extending that useful life. Change that 5 years to 10 years, that $6,000 expense is now down to $3,000. They have now fraudulently increased these earnings by making these little adjustments. And very similar, they also assigned arbitrary salvage values to other assets that previously held no salvage value. They failed to record expenses for decreases in the value of landfills as they were filled with waste, refused to record expenses necessary to write off the cost of unsuccessful and abandoned landfill development projects. This one is interesting. It's a classic case of improperly capitalizing expenses. See, they would start making a landfill, which is an asset, not an expense, since it'll provide future benefit, but then they'll abandon the project. Since there's no future benefit to anyone anymore, it's no longer an asset and should now be expensed. But, of course, expensing it would lower their earnings, so they keep it as an asset and just attach that value to a different landfill. They established inflated environmental reserves, liabilities, and connections with acquisitions so that the excess reserves could be used to avoid unrelated operating expenses, and properly capitalized a variety of expenses in addition to that one I already mentioned. Failed to establish sufficient reserves, liabilities to pay for income taxes and other expenses. However much of that you retained, just realize that this is all illegal and it was done to make their income look higher than it was. Here's a table showing how much they originally stated in earnings compared to the amount that they restated. So basically, how much they lied and said they made compared to how much they actually made. In my comparison, where that kid changed his grade and lied to his parents, that was basically a victimless crime. I mean, it was hurting himself in the long run, I guess, but this had actual victims. Think of the investors, the people who bought stock in Waste Management over this time. It's hard to decide which stock to buy, looking at all the information and determining who's doing well and who's gonna grow and where you can make the most money. Well, one of the big tools that people use to make this decision are these numbers. There were people in 1996 who did their homework. They saw that Waste Management made $192 million that year and decided to buy their stock based on that information, when in reality they lost $39 million. It's not right. And consider that number was guaranteed to be accurate. backed by the company and verified by an independent auditing firm. In this case, it was one of the big 5 firms, Arthur Andersen, who you may recognize from the much more famous Enron scandal. Here's what happened. I guess Arthur Andersen would come in and perform their audit, verify all the numbers, and tell Waste Management, hey, we found some irregularities and you need to make these adjustments before we can sign off on this. And then Waste Management would come back and say, yeah, just sign off on that and we'll deal with all that later. Amazingly, Arthur Andersen agreed to that and gave them an unqualified opinion, which I know doesn't sound good, but it's actually the best opinion you can give. Turns out there were conflicts of interest going on, and Arthur Andersen would make more money keeping them as a client. It was all crooked. The same thing happened year after year. There is plenty of blame to go around here, but the man thought to be the most responsible for all this was the CEO, chairman of the board, and founder that we discussed earlier, Dean Buntrock. As the SEC says, he's the one who set earnings targets, maintained a culture of fraudulent accounting, personally directed certain accounting changes be made to make targeted earnings, and was the spokesperson who announced these earnings to the public. All of these lies made the company appear much better than it actually was, but they also benefited him personally. The SEC estimates that he's gained more than $17 million through performance-based bonuses, retirement benefits, charitable giving, and selling company stock while the fraud was happening. For example, he received a tax benefit by donating inflated company stock to his former college to fund a building in his name. It's just inexcusable. The results? Well, Arthur Andersen paid a $7 million penalty, which was the largest ever against an accounting firm, in addition to $220 million that they agreed to pay with Waste Management to settle shareholder lawsuits. Waste Management's management team agreed to pay over $30 million to the SEC, most of which came from Buntrock. There were penalties and fees and settlements paid all around, but that's the extent of the consequences. Obviously, today the company's back on their feet and doing better than ever. Waste Management, that is, not Arthur Andersen. I have a video about Enron if you want to hear more about them. But first, let me know in the comments, what do you think of this whole thing? As I said, I think it's just inexcusable. I'm curious, have you ever heard of this scandal? Because I feel it gets overshadowed by Enron and some of the others going on at that time, but this was big. We have new laws in place to prevent this, so I like to think that accounting scandals of this magnitude are a thing of the past. But they're important to look back on, and I'm glad I was able to shine some light on the scandal that shouldn't be forgotten. And of course, let me know any other thoughts you have about any of this. I'd like to hear what you have to say. Thank you for watching.